What if I told you that most investors choose between growth stocks and value stocks the wrong way? Would you believe it? That decision can be the difference between multiplying your wealth over 10 years or spending a decade frustrated. Today, you'll understand which one truly makes sense, and more importantly, when it makes sense. What's up, investors? I'm Chad from Zero Markets, and today I'm going to break down one of the biggest dilemmas in the market: growth stocks or value stocks. But don't worry, we're not covering this at the surface level you usually see. We're going deeper into how the US market really prices these stocks, what economic cycles do to each one, and how smart investors use this strategically. Now, if you invest in stocks, or even if you're thinking about getting started, this video could change the way you think about your portfolio. Stay tuned. To keep this simple and very straight to the point, we're going to divide this video into 5 clear parts so it doesn't feel overwhelming, okay? Part 1, what are growth stocks? Really, growth stocks are companies that reinvest almost all their profits to expand. They grow revenue very fast, they gain market share, and then they innovate. Think of companies that paid little to no dividends for years because they were focused on scaling. Investors are buying future growth expectations. The challenge, you're not buying the present, you're buying a promise. And in the financial markets, that promise depends on low interest rates, high liquidity, economic confidence. When interest rates rise, these stocks tend to suffer. And that's exactly what we saw in 2022 when the Fed aggressively raised rates. Part 2, what about value stocks? Value stocks are established, profitable companies, often trading below what they appear to be worth. They typically have stable cash flow, they pay dividends, they grow more slowly, but they grow with predictability. Classic investors like Warren Buffett have always looked for stocks trading at a discount to intrinsic value. But here's the critical point. Not every cheap stock is a good stock. Sometimes it's cheap because the market already sees structural problems. Okay, before we move on to part 3, make sure to like this video, please, so YouTube understands your interest in this topic and shows you more investing content. Part 3, what do economic cycles do to these stocks? All right, this is the part that few people really explain. The performance of growth versus actual value stocks is cyclical. So in low rate environments with monetary stimulus and economic expansion, growth stocks tend to lead. During periods of high interest rates, elevated inflation, and economic uncertainty, value stocks often outperform because when money becomes more expensive, the market prioritizes present cash flow, not distant promises. So it's not about which one is better, it's about context. Part 4, the common investor mistake. The average American investor consistently makes 2 mistakes. They buy growth stocks at the peak of excitement, and they rush into value stocks after they've already rallied. They react, they don't anticipate, and the market rewards strategy, not emotion. Strategic investors use both categories within a structured portfolio framework. Part 5, and just as important, which one makes more sense today? That's the question everyone wants answered clearly and directly. You know what the honest answer is? It depends on the cycle, depends on your time horizon, and it depends on your risk tolerance. If you have a long-term investment horizon and you can handle volatility, then growth stocks can accelerate wealth building. If you're looking for stability, for income, lower volatility, value stocks may make more sense, but the real game is strategic balance. So growth stocks or value stocks? The real question isn't which one is better, it's which one fits the current environment and my strategy. And that's what separates average investors from professionals. If you want to learn how to build a strategic portfolio using stocks the right way without chasing trends, subscribe here to Zero Markets. Now in the next video, I'm going to show you how to combine growth and value stocks within a framework designed to navigate economic cycles. Because investing isn't about picking sides, it's about understanding the game.